Assalamu alaikum respected viewers. This is your Excel lesson 25 on the topic of project sensitivity and scenario analysis part 2. I hope this lesson finds you well and in best of your health. Kindly go through this session till the end to have a good grip on the subject. And this is basically the part 2 of my previous session, session 24, in which your boss asks you two questions. One is whether to invest in a certain project or to keep it into a bank, to keep the money of the firm or the company into a bank. And for that very purpose, you have given him the three concepts of NPV, BCR, and IRR figures concept and the figures too. And the next thing was he was interested in what if the scenario, what if the situation changes, what if the basic inputs of the project changes, what would how it would affect the overall benefits of the project. So that very purpose, this is the part 2, and we would straight away go to the sensitivity analysis, how we define it and how we calculate it into the Excel worksheet. So sensitivity analysis is an important feature of a comprehensive cost benefit analysis. Is the inclusion of a risk assessment. The use of sensitivity analysis allows user of the CBA methodology to change the robustness of the result to changes in the assumption made, that is to change discount rate, time horizon, estimated value of cost and benefits, etc. In doing so, it is possible to identify those parameters and assumptions to which the outcome of the analysis is most sensitive. Therefore, this allows the user to determine which assumptions and parameters may need to be re-examined and clarified. So this is the point 1, and we will basically do it right now into the next sheet. Sensitivity analysis is the process of establishing the outcomes of the cost benefit analysis, which is sensitive to the assumed values used in the analysis. This form of analysis should also be part of the appraisal for large projects. If an option is very sensitive to variation in the particular variable, that is traffic estimates for a road, then it should probably not be undertaken. So if the relative third point is if the relative merits of options changes with the assumed values of variables, those values should be examined to see whether they could be made more reliable. It can be useful to attach probabilities to a range of values to help pick the best options. So we will do it in the next sheet. All these three basically explains that you can change the benefits, you can change the costs, cost may be changed, benefits can be changed. Similarly, the discount rate can be changed. So it's basically independent. Discount rate is, as the state bank is independent of the, it's an independent entity. The Federal Reserve Bank or the state bank is an independent entity. Similarly, the discount rates are basically independent of any stress or any pressure. So it's basically ownership of the state bank. It's basically issued by the state bank, relative federal bank. So it can also change. So in the different scenarios, what could happen? So we will go to the next sheet. See, sensitivity analysis of NP and BCR with discount rate of any project, hypothetical figures that are given in earlier examples. So at discount rate 10%, we have NPV of 51.94, BCR at 1.75. If discount rate, it's basically inversely proportional. Inversely proportional means with the increase in the discount rate, the NPV, net present value, and BCR will basically reduces. These two factors reduces with the increase in discount rate. Simple. It's the basically inverse relationship. With the increase in discount rate, there would be decrease in NPV and BCR. So discount rate, when it was 10%, NPV was 51.94 million and BCR was 1.75. You are gaining 0.75 cents, 75 cents by investing $1 on the investment of $1. It's basically showing this, the first row. The second is at 11% discount rate, you are getting 46.35 million and you are getting 69 cents on $1 investment. Similarly, I am going to the directly to the 18%, and at 18% you are basically NPV, you are reduced, your NPV has reduced to 18.19 million and your BC, and you are getting 32 cents by investing on the investment of $1. And lastly, at 20% discount rate, you are getting NPV of 12.74 million, and what the BCR is 1 point, you are getting 24 cents on the investment of $1. Again, you can basically establish this fact from these final analysis that even at 20% discount rate, you are getting positive NPV. This is positive, not negative. So again, you are getting something on your project. It's positive. And again, BCR is not equal or less than 1. So again, by on the principal investment of $1, again, you are at least getting 24 cents, even if the discount rate goes to 20%. So this is showing that. So coming on the Excel sheet, see here, if I change it, it is 17%. If I change it to 10% discount rate, see it's 51.94%, the NPV. See, it's 51.94%. And then if I change it to 11%, it's 46.35. It's 46.35 at 11%. So this sheet, you will find it attached in the description, the link, and you can download it and you can check it yourself. Formula would be there. At 12%, it's 41.23, 41.23. Again, on 13%, it's 36.54, 36.54. Again, on 19%, it's 15.35, 15.35. And similarly on BCR, you can basically BCR, you can change the discount rate, you can change it to 10%, and 10% is 1.75. At 11%, it's 1.69. At 12%, it's 1.63. At 15%, at 1.47. You can see it's basically 1.47 at 15%. At 20%, it's 1.24. At 20%, 1.24. See, so coming to the next, it's scenario analysis. The scenario analysis technique is related to sensitivity analysis, whereas the sensitivity analysis is based on a variable by variable approach. Scenario analysis recognizes that the various factors impacting upon the stream of costs and benefits are independent. Same way, I will change basically these values on scenario analysis. You can also change the operation and maintenance cost. Plus, you can change mainly in NPV. You can change the benefits. The incremental benefits can be changed too. Yes, the tool collected here, the tool collected or the revenue collected, it may change. It may change the if you are running a cola company, the production line can change, the demand can change, especially the supply can change. So that can really directly affect the revenue of the firm. And similarly, in the case of public sector project, government, the tool can change the mobility. Like in COVID-19, the mobility of vehicles have reduced, so the tool collection have drastically be changed. So these values can also be changed. The scenario analysis says that please do not only count on the discount rate. You can change these main values, the tax collected and the O&M cost. It can also increase again in the case of war or in the case of other such kind of natural or other natural calamities. The O&M cost can raise drastically. It can raise, and it can basically increase your total costs. So though both the revenue can reduce, the total cost can increase, or it may also reduce with the advancement in technology. So these are totally independent variables, so they can change. So this scenario analysis want to explain it. A number of scenarios are formulated, best cases, worst case, etc. And for each scenario, identified range of potential values is assigned for each cost and benefit variable. Here, basically, the values of cost and benefits are changed, and look at what happened to the project. When formulating these scenarios, it is important that appropriate consideration is given to the sources of uncertainty about the future, technical, political. Once the values within each scenario have been reviewed, the NPV of each scenario can then be recalculated. So coming to the next sheet, see, this is the first scenario. This is the best case scenario. 53 million is the capital cost. O&M is 45.50 million, and tool collected is 3.315 million. The best scenario, the NPV is 90 million and the IRR is 40%, and you are getting more than double on your investment of dollar. You are getting $1.36 by investing $1. So it's very good. It's giving you very good values. There is a middle case in which you have capital cost of 60 million. The discount rate is 12%. In this case, previously the discount rate was 10%. In this case, discount rate is 12%. So you have changed all things like the discount rate, the capital cost, the O&M is 38.5 million. The tool collected is 245 million, or the revenue collected is 245 million. The NPV is 41.23 billion. See, the tool collected is in billion. I'm sorry, the tool collected is in billion. You can say it mean million in billion. It depends on you. Here and NPV, it's written 41.23 billion. The BCR is 1.63 and IRR is 27%. So you are getting 63 cents on your $1 investment, and the IRR is 27%. So IRR is greater than 12%. So it's good. And NPV is again, it's in positive 41.23 billion. And the third worst case scenario is like this. You have basically the capital cost is 77 million and the OM cost is 31.50 million. Revenue collected is 112 million and your NPV is basically the discount rate is 14%, NPV is minus 29.56 billion. The BCR is C 0.59%. Sorry, 0.59, and you are basically losing, you are losing 59 cents by investing $1, and IRR is 1%. So this is the worst case scenario. So I explained all the three cases. And this is economic appraisal. You can basically see for economic appraisal, the results of the analysis of economic soundness of the project must be assessed carefully. Economic appraisal aims to assess the desirability of the project from the societal perspective. This form of appraisal differs from financial appraisal because financial appraisal is generally done from the perspective of purely financial terms and returns. Economic analysis also considers non-market impacts such as externalities. Various analytical techniques are used for economic appraisal. While the former is used for projects with benefits that are measurable in monetary terms, the latter is used for project benefits normally not quantified in monetary terms. Economic analysis and cost benefit analysis, especially for monetary terms. For projects appropriate for cost benefit analysis, the analysis based on summary measures of performance, economic internal rate of return, or NPV. Calculated based on the incremental benefits and costs of the projects to society as a whole. Using the with project and without project criteria, the main benefits and costs, including the key underlying assumptions made, market output for key outputs and inputs, phasing of development, shadow prices, and sensitivity analysis should be presented. For projects not appropriate for cost benefit analysis, the basis for the performance of project should be clearly specified. For example, project cost effectiveness ratio may be compared with those of alternative designs that achieve the same desired results. The analysis should identify those key variables that render the cost effectiveness ratio higher than the rate of rejected alternatives. So you can compare the alternate projects with this. 2 or 3 projects, you can compare it by having 3 values with you. So this is conclusive remarks. I will not read all the presentation. The last point. It is vital that CBA's objective, its conclusion should not be prejudged. Like it should not be used as a device to justify a case already leaning for or against a proposal. Factors of questionable or dubious relevance to a project should not be introduced into an analysis in order to affect the results in a preferred direction. Like unrealistic benefits or cost, I would say, should not be introduced into this. Like unrealistic benefits you have added into the conclusion to make the project on the positive side. On unrealistic cost you have included in the project is positive, but you have introduced unrealistic cost to increase in its cost and to finally come up with the negative NPV. That is not good. And again, if the project is going towards the negative side, you know it, and you are basically, you have included the unrealistic benefits to make its NPV positive, to make its IRR greater than the discount rate, and to make its BC ratio more than $1. So that's, or more than 1. So that's not good. So that's it's this last point wants to conclude. So at this point, I have come up to the end of my presentation. And if you like it, kindly click the like button, subscribe to my channel, and share this presentation. and share this lesson with your other colleagues, buddies, to have knowledge about it. And again, wait for my next lesson, next session. It would also be very interesting. And thank you very much and take a very good care of yourself. Allah Hafiz.